Hey guys, Kurt from the Brixwell Group here. Today I want to talk about something that is the dream of most property investors, both existing and new. That is to buy a property for whatever amount and see an immediate bump in its price as soon as it settles. This is often referred to as instant equity. But the question is, what is the likelihood of you being able to pull this kind of thing off if you're not a seasoned pro who knows what to do and how to do it? We'll go through this today so that you can weigh up what you think you might be able to do for yourself. If you're not familiar with what equity is and how much you can potentially access in a property that you already own, then watch our earlier video on how it all works so that this makes a bit more sense to you before we get started. It's just up here. Okay, so what is instant equity? Instant equity is pretty much the property equivalent of an arbitrage. Don't know what an arbitrage is either? Let's talk. An arbitrage is like buying, I don't know, maybe toilet paper from Woolworths for $7 a pack and selling it on eBay immediately for $49 a pack, meaning that you collected $42. You got it now? All you profiteers out there using the COVID toilet paper crisis to make money? It's kind of like retailing to a degree, but it's supposed to be risk-free. To add to that, an arbitrage is a financial market term that basically means you're making money from an inefficiency. That is, the price of an asset, for one reason or another, is lower than where it really should be according to the price of other similar items on the market. Believe it or not, people have been making money through this type of thing pretty much since the stock market became a thing. However, the techniques have gotten increasingly technical, more complicated, and expensive to take advantage of. So if this isn't your forte, then maybe instant equity in a property could be easier, right? As a property investor, your arbitrage would come in the form of buying something below market value or doing something to the property that someone else hasn't done before you in order to reach its full price potential. Another bad example, but one that's simple to understand, would be if two houses side by side are identical in all ways except for the fact that one has a pool and one doesn't. The house that has the pool sold for say $900,000 while the other one is on the market for $600,000. Surely that pool isn't worth $300K. You could therefore buy the property, put in a really nice pool for $100,000 with all the trimmings, and in theory have a house that should now be valued at $900K, meaning that you manufactured $200,000 of equity for yourself. That's pretty simple, right? Well, that's the general idea, but don't just go buying a house now and putting a pool in the back of it because it might not work. Okay, so why would you want to earn instant equity? Generating instant equity obviously has benefits to an investor. If you have more equity, you can cash it in and turn the equity into cold hard cash, which would pay capital gains tax on most likely, or use that equity to buy more property. Again, if you want to learn more about how you can access your equity, then watch the video above. Generally speaking, we'd be going for option B, as it would mean that we'd control more assets that generate more income, more capital growth, and more equity in the long run, meaning that we can continue to invest more and become masters of the investment property universe. Okay, so how to generate instant equity? Earning instant equity in a property is easier said than done, despite my beautiful initial example. However, it's not impossible. Generally speaking, established markets are pretty efficient because lots of people are covering properties in that market, looking for opportunities to buy and so forth. This means that getting a bargain you can do minor works to and make big money from is a challenge, especially when you take into account transaction fees like stamp duty, legal fees, the cost of renovations, etc. Two more likely ways to generate positive income as an investor relates to new developments. The simplest way is to look for areas where established properties only a few years old are turning over, and at the same time, land is available within very close proximity to them. So think new estates with houses that are a few years old and blocks still available for simplicity. Now, if you can have something similar built to one of the properties that you've seen being turned over recently, and the cost of the land plus the build is lower than the recent sales price of that similar property, then you have a situation where you've potentially realized some instant equity. You could also realize instant equity from the construction of, say, a duplex, where you can either strata or Torrens title the finished product and sell either one or both of the sides separately. Because of the economies of scale, the build is cheaper than if you were to build two separate properties, and as a result, there could potentially be equity in it for you. There's a formula that you should try to stick to when you do this type of thing. Our team has worked hard to figure this out over the past few years, so I won't go into any detail about it here. However, let us know if it is something that you'd like to talk about by booking yourself in for a call through the link in the description, and we'll show you how it works and what you'll need to do. Okay, so next up, would you sell straight away if you manage to generate some instant equity? The answer to this question is probably no. Mainly because if you built and sold immediately to realize, say, $60,000 in instant equity, then after agent fees, capital gains tax and holding costs, you'd be left with nowhere near as much as you would have expected given the amount of effort that you've potentially had to put into making this happen. However, again, if you use that equity to make additional purchases, you would have a situation where you can use all of that money without creating a tax and fee frenzy for yourself. To counter this, we will often say have a duplex built for our clients, get them to rent both sides out for at least a year so that they can get a capital gains discount, and give the property some additional time to grow in value before they sell either one or both sides of their investment to realize their equity gains. We'd be more thrilled if they just decided to hold the property long term and continue to build their portfolios as we like to do for ourselves, rather than just trying to make quick money. As historically, they'll have a major chance of doubling the value of their investment as opposed to making a quick 10 to 20% score and paying away loads of that income in tax and other expenses. Alright guys, so I hope you've got something out of this video today and you have a clearer understanding of what instant equity is when you see it spoken about or promoted. Anyway, as always, if you like this video, make sure you give it a thumbs up, leave us a comment with any questions you might have, and consider subscribing to the channel if you like the look of my face or you want to further educate yourself about investment property and personal finance. Okay guys, that's all. I'll see you in the next video.